Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
I'm Carol Messer, along with Tim Stanovic. Let's get, though, to some stocks on the move on this Thursday. Bloomberg News cross-asset reporter Denitsa Sokova with us. And we start with the M&A pursuit of Warner Brothers Discovery. That's going to be a streaming story someday. But anyway, where are we?
Exactly. It's part of the daily news check. We're talking about Netflix. It's very interesting. So Netflix is down more than 2%. Paramount Skydance is up more than 2%. The two respective tickers are NFLX and PSKY. There is yet another extension to a tender offer. The latest date we have is February 20 for the Paramount Skydance offer. The company said it would ask investors to vote against the proposed sale. It's been a pretty rough stretch for Netflix ever since that deal and the talk about it emerged. The company is actually down 38% since its peak. Warner Brothers is planning a special meeting to approve the Netflix deal by April. Paramount has very little time to get their part of the offer. Netflix shares tumbled yesterday. It was a pretty rough day for the company. That's extending that stretch. What we saw, some interesting detail, is closing the Warner Brothers deals will add $275 million costs for this year on top of $60 million spent through the end of 2025. So things are getting more complicated for investors, and they will pile share buybacks. So there was some negativity connected with that.
It's really fascinating. If you go to the Bloomberg and you do graphs on Paramount, Skydance, and Netflix, you know, it's these charts that just kind of go down. It's a good ski slope you might enjoy skiing on. And then you go to Warner Brothers Discovery and you just see it going the other way.
But it's fascinating. No matter what happens, Netflix goes down on this.
Well, and Paramount Skydance has been under pressure too.
But Netflix at this point is the clear favorite. And investors don't like that. They're very concerned about the spend.
When we got the announcement, there was a negative reaction. Now we have announcement of extended tender deal. We still have a negative reaction for Netflix. So
just do it already, somebody.
I know.
All right, let's go to Carvana. I've been keeping an eye on this one today.
Very different story. Yes. Company is up more than 4%. Ticker is CVNA. We're seeing a lot of upgrades. The most recent one is Barclays, and it's pretty optimistic. The target is $530, up from $465. Pretty interesting story. They're saying profit increase. They're saying 2026, they raised their volume forecast, but it's coming on top of a lot of bullish sentiment. UBS raised their target. Morgan Stanley had a really interesting note. So they have a super bullish target that they increased earlier this month. The current target is $750. And it's coming back to that self-driving cars. So Carvana is acquiring more of those car dealerships in regions that are expanding in self-driving, like Phoenix, Dallas, San Diego, and Morgan Stanley is seeing a lot of potential with that, and perhaps some of those additional upgrades we're seeing are happening because of that. And they see potential for partnership with Waymo and Carvana expanding in that field. The company had 100% gain last year.
Well, wait.
It's pretty impressive.
I'm so glad you went there. I pulled it up on the Bloomberg, did the HCPI year function. So it was around a $5 stock at the end of 2022. Since then,
it had some rough times.
It's up 8,800%.
It's incredible.
Since the end of 2022.
It's incredible.
You and I put all our money in there.
And we have Morgan Stanley target of 750. This is crazy. This is their bullish target.
I'm just saying. But you're right.
There were some times where there were concerns about, the viability if you go back to that time.
About 12% of the float is short.
Yes.
Okay.
Right. What's your last one?
Yeah.
Meta. Let's have some good news for tech stocks. They've been under a lot of pressure, and Meta, all of them, has been under a lot of pressure. The company is now up 5.5%. There is some optimism with Jefferies. It's coming off the company being under so much pressure lately, especially against Alphabet and Amazon. They're pretty much saying, this company has been under such a big sell-off that it makes sense to buy it now. They also reiterate their price target, which is very, very bullish. It's $910. They're seeing a lot of optimism there. They're saying they're going to have a lot of new developments in 2026 when it comes to their AI with text and video. That will really help. We're yet to see. But as we know, a lot of the concerns started with their last earnings report. Meta is actually down 18% since then.
Wow.
And we had some pretty big numbers about capital expenditure, around 110 billions. So a lot of pressure from there. It was like a 50% increase year over year.
Right.
So ever since, investors have been pretty jittery about Meta spending. But today, some relief.
Company reports January 28th after market. So we'll see what kind of CapEx spend is going on. All right, good stuff. What?
Next week's going to be a big one.
It's going to be.
It's the week of the quarter that we're all waiting for.
It's also a Fed meeting.
I know.
Fed decision.
Yeah,
it's always a fun one.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.